All right, what's up, everybody? This is Ryan Mallory, SharePlanner.com, giving you guys a market update, going through some of the hottest stocks of the day right now, going through some of the trades and some of the frustrations that have been a large part of many traders' weeks this week. You've got Trump tweets that are sending the market lower. You've got China trade talks. We've got Jerome Powell talking about one and done on the rate cuts, then walking it back minutes later. You've got a lot of stuff with the Federal Reserve, people talking about how many more interest rates are we going to get. You got North Korea, I guess, maybe even launching more rockets. I don't know. Rocket Man, he's always at it, I guess, right? But in any case, I want to go through these charts. You got stuff like Apple, where there's huge sell-offs there. You got Amazon flirting with going down below 1,700. You got Square earnings that are taking this thing, trying to take it down below $70 a share. A lot to go over. Let's jump on it right now. First up, take a look at the S&P 500. You have this rising uptrend off of the December lows. I think we're going to probably test that here pretty soon. I think there's a good chance we bounce off of it. That's where I'm probably looking at covering my long position in SDS. If you don't know what SDS is, it's an ultra short 2-to-1 return on the S&P 500. It's doing pretty well for me. I got shaken out of it early on yesterday for like a 0.5% gain when the market started rallying like 35 points higher on the day yesterday. I went ahead and said early on, I'm not going to hold this. I'm going to go ahead and book a small gain and move on. I started getting long. I got into McDonald's, which is doing good for me today, and I got into Dell. I got out of Dell yesterday. I didn't like the chart. I'll pull up Dell. Why I got out of it. This nasty candle here, I saw what it did before when I got one of those. When it tried to break out, it saw 2 more days of selling, 3 out of the next 4 that followed. I didn't know it was going to do this the next day, but I didn't like that candle. I felt like it was a warning sign. Get out of it. I did. And as a result, I'm avoiding an 8% down day. I wouldn't have gone hit that bad. I would have been basically knocked out right at the open, so right around that $55 mark. So I would have avoided about 4% of those losses. Had I stayed in, I didn't. I got out with like a 2% loss on that trade. But after I got out of Dell, I quickly jumped back into SDS. I got in at around 30. It's at about 31.08. So I'm up about a good solid 3% right now. Let me double check that for you. About 3.6%, so even better than I thought. Right now you can see that we have the S&P 500's 50-day moving average in play. It's trading below it right now, and then it has this rising uptrend also in play. Now if you look at the SPY, and some people might get confused about this, the SPY has actually got it testing this trend line already today. However, the reason why SPY is different than S&P 500 is because of the dividend. SPY pays out a dividend and it gets reflected in, it doesn't always get reflected in stock charts. My TC2000 platform, I don't reflect dividends. I just want to know the exact price action. I don't want it to factor in dividends at all. Now, let's get on to some bigger names like Apple. Huge breakout following its earnings, right? Actually, it was a couple of days before. And then the earnings come, big breakout, not a good candle. If you see this candle here, okay, maybe you wait to the next day and see if it can and pop it all. Once it pops, maybe you book the gains. But look at this candle. I mean, this isn't good. It's back below the breakout level. I think right now, if you're targeting an entry for Apple, this isn't the place for me to get long on it yet. I would probably say if you can get in at like 184, 185, this rising trend line off of the January lows, that's where I want to get into it. Does that, I think it's a pretty good chart, pretty good setup to get long on. Take a look at SQ. Man, this stock here, this one's been a headache for me all of June. I just really didn't trade it that well. But look, it's testing this rising trend line. It's trying to bounce. Let's see, it's about what, $2 off of the lows, $2.50 off the lows. So it's not a bad look for it. It's trying to bounce. However, I don't really like this trend line though. I mean, you look at this trend line going all the way back to like what, June 23rd of 2016. It doesn't really test it, and you really have to make this trend line based off of the action that you saw back in May when we established those lows, and then it rallied in June. But it's already testing that trend line again. I don't like that. I think that's a problem for the stock moving forward. Had it tested it like somewhere back in here in 2018, that you might have like a more legitimate argument for wanting to play this bounce. I don't really have that. I think if anything, this is probably the more legitimate trend line because it tests it here, forms it there, and then tests it again right here, and then it breaks it following the earnings. And it actually broke it back in June too. I think this is a problematic chart. It doesn't mean that there won't be short-term setups in the future, but I don't think you can blindly buy it here. You need to get some days of consolidation and a willingness to try to push back into this gap here that it is currently formed. Pens. Okay, I get that, you know, Pinterest is trading phenomenally higher today. Earnings doing great. social media stocks lately have been doing good. I mean, granted, Facebook's kind of, in the crapper, the past couple of weeks, but you look at Twitter, nice moves there. You look at Snap, really good there. It's actually up today when the market's down, up 2.5%. That's pretty solid. It seems like Snap's trying to really recover. But Pens, I don't really find much of a fascination with. Yeah, it's up nicely today, but I don't think you can do anything with it. I mean, how do you really trade something that's up like this much? You put a stop loss below $32 and hope that it doesn't hit it? I don't think that's a good risk reward. Is it going to go up another $4 or $5? Probably not. At least not in the short term. It's not. So I don't see the risk reward really being there. Not with some market pressures that we're seeing over the last couple of weeks. I think this is a hard pass. And darn it all, I had MYGN on my watch list this past week. I never really saw a reason to get long on it quite yet. I mean, I guess I could have 2 days before that big announcement, but you can't predict these kinds of moves where it goes from $30 to $47. Impossible. You can't do it. So I don't worry about it. Hopefully, people who follow my watch list, I post these for free every Monday. So if you got into it, I'm glad. And keep moving up that stop loss and seeing where it takes you. Tindem, for some reason, this thing's trending on StockTwits, so I thought I'd highlight it. There's nothing here, guys. I mean, yeah, it's up today. The market's down. It's up 7.7%. This thing's a volatile thing. This is a volatile stock, and it's not worth trading. It really is not. I mean, what are you going to look at? Going all the way back to, February, late February, early March? This thing just trades sideways. I mean, you're just getting knocked all around. I wouldn't touch this thing. Kudos to it for being up 7.4%, but there's nothing there. Amazon. Look at this. December lows, right? Formed a nice little trend line. Tested it again in early June. Held on to it pretty well. Check this out, though. This is the reason why maybe we should have some pause about this market going forward. This thing, granted, it's down 7 days in a row. But, I mean, it's breaking the long-term trend line off of the December lows. It's a problem here. It really is, especially if it closes below that trend line, which I think it probably will unless we just see another green shoots kind of a day where the market just goes bonkers at the close. Another drug manufacturer, another pop, 34%. Move on, guys. Speaking of a good way to create a lot of trading losses, UVXY. Don't do this thing. Don't ever trade this thing. What's the other one? TVIX? Don't trade this one either. Man, so many people, when they're getting bearish on the market, they want to jump into these things. Look at the all-time chart on this thing. This is just plumb ugly. My chart is having a hard time even pulling it up. It's had so many reverse splits that this thing back in 2013 was trading at $1.85 million a share adjusted for split. It may even be higher than that. Yeah, the high is $2 million when you account for all the reverse splits on this thing. This thing is such a money pit. I mean, it is awful. Don't get into this thing. UVXY, same thing. Look at this thing. It's all-time highs. Again, 1.8 million basically. Why? It's trading at $31. Obviously, the long-term outlook is not very good on these things. They're destined to lose money. They just keep reverse splitting, and they will always do it. 5 years from now, if these things are still even on the market, it's going to be reverse split. You'll probably have like a 10 or a $15 million original value, from when it first started trading back in 2013. McDonald's, why am I into this thing? Well, first of all, look at the monthly chart on this thing, right? I mean, goodness, all this thing does is just keep going up. I mean, I hate saying that because I'm in it, and probably the moment I say that, this when it starts to go down. But overall, though, did great during the quarter four pullback. I mean, when the market dropped 20%, this thing was still going up every time. It was great. December, yeah, it struggled in December. Everything struggled in December. But still not as bad as the rest of the market. And if you were long on it, you didn't lose money during that huge sell-off of quarter four. But since then, 1, 2, 3, 4, 5, 6, 7, 8. 8 months of returns so far. I mean, assuming August finishes higher. But it's a really good stock, just a really good chart. It pays a dividend. In this kind of environment, people are going to go to those. People are going to go to safety. It's listed as a consumer cyclical stock. It's not. It's a staples. I mean, technically, yes, it's discretionary, but it's really staples. People aren't eating filet mignon if the market goes into a recession. And I'm not saying we're in a recession right now. We're not. But people will go to MCD when we start seeing heavy selling out of fear that we might be going into a recession. So that's why you're seeing some buying power into that name today. Finally, let's look at BBY. This thing has been one of the best charts since June. It's just been beautiful, and you know, I'll just get rid of some of these lines so you can see it a little bit better. It's kind of a nutty thing, but you have an inverse head and shoulders pattern broke out. I traded it in June. I made about 4%, I think. It was a good trade. I wish I would have held it probably a little bit longer, just followed this trend line. I didn't do that. However, look at BBY. It's pulling back to this long-term trend line here, so it's making an interesting case here of whether or not it can hold it. So far it is, and can it bounce here? If it does, there's a lot of potential for it to go back to 75 in the very short term. I think it's a good bounce point. The only risk that I don't like is look how much it dropped yesterday off of that Trump tweet, you know, about the additional 10% of tariffs. It took a hard hit. It took a 10% hit. So what happens if Trump tweets something like that out again, saying, okay, I'm upping it to 20% because of something that the president of China said over the weekend that I don't like, so I'm going to go ahead and slap another 10-20% of tariffs on there, and it's going to drop further. But this time it's not going to happen in market hours. Maybe it doesn't. And what happens? All of a sudden you're gapping down 10-15% again in Best Buy perhaps, and you weren't in, the market wasn't open for you to get out during market hours. So that's tough. I would say probably avoid this one. I just really don't like it. I like the chart. I don't like the headline risk behind it. Also, check out the Share Planner Splash Zone, the swing trading splash zone that I like to call it. Great community of traders. I'm posting all my trades in there right now. I've got SDS and MCD. Both of them are up today despite the market being down. Been great so far. I'm really liking that. Hopefully that continues into the end of the day. If not, you know, I'll be raising my stop losses to protect the profits. You know, it's a great community of traders. People are bouncing ideas, things like BBY and the trend lines on SQ. They've been getting discussed all day long. Amazon, same thing. The China tariff talks. It's a great community of traders. I also provide it via WhatsApp with all my real-time trade alerts. Anytime I'm making a trade, I'm letting you guys know I'm making a trade so that, you know, whatever you want to do with that information, you can do. Thank you. Take care. Have a great weekend. God bless. Thanks for watching. I hope you enjoyed the video. Please be sure to like and subscribe to my channel, as well as check out some of these other cool videos that I've done. And if you want to swing trade with me each and every day, you can do so by going to www.shareplanner.com/splash zone. Thanks and happy trading.